Thank you, sir. Chairman Hauptman, you're recognized for 5 minutes for your oral remarks.
Thank you. Chairman Hill, Ranking Member Waters, members of the committee, thank you for the invitation to discuss the operations, programs, and initiatives of the National Credit Union Administration. I'm grateful to President Trump for selecting me as the 13th chair of NCUA. NCUA's mission is to enable access to financial services by facilitating safe, sound, and resilient credit unions. The 4,300 credit unions in America serve over 143 million Americans with over $2 trillion in deposits. Federal credit unions serve in all 50 states, and 45 states have state-chartered credit unions, not to mention Guam, Puerto Rico, and U.S. Virgin Islands. The credit union movement was a grassroots effort to expand financial services and provide low-cost credit to groups and communities that were otherwise excluded from the financial system. The origins of the movement drive the foundational difference between cooperative credit unions and banks. Credit unions are owned by their member owners, and like all cooperatives in America, most of which are not credit unions, they do not have shareholders. Credit unions can only serve their members, other credit unions, and credit union organizations. By law, the types of financial services they are offered face certain limits. The law caps the interest rate credit unions can charge at 18%. It's quite a bit lower than banks are allowed to charge. It limits the number of business loans and restricts their investment authority. Just as credit unions are unique among financial service providers as cooperatives, NCUA is a little bit distinct from our fellow regulators in that we are both the regulator and insurer for most credit unions. When acting as a regulator, the NCUA is charged with regulating, chartering, and supervising federally chartered credit unions. When acting as an insurer, we're charged with managing and protecting the Share Insurance Fund. Both state and federally chartered credit unions are eligible for insurance from NCUA. In other words, for credit unions, NCUA is the OCC, FDIC, and the Fed all rolled into one because in addition to being a regulator and insurer, we're also a source of emergency liquidity through the Central Liquidity Facility. The CLF provides member credit unions with a source of loans to meet their liquidity needs. NCUA must meet its statutory obligations with awareness that overregulation can stifle innovation and growth in a way that could threaten the viability of the credit union system. Our regulatory activities must be fair and transparent. For example, we must avoid the perception and the reality of regulation through enforcement. I am proud that it is NCUA policy against no regulation by enforcement. Defined in very simple terms, in America, the sequence of events is right rule, then enforce. It's worth noting that as an insurer, NCUA's incentives are aligned with the success of the credit unions we regulate. While the agency is not regulated by enforcement as a matter of practice or policy, we're proud to have an official public policy. It is on our website, it flows through the examiner manual, and it merely extends the same protections that our civil servants have under civil service law to the institutions that we regulate. To right-size our approach to safety and soundness, the NCUA is doing several things to capitalize on the opportunities created by the Trump administration to foster innovation. As a first priority, NCUA is reviewing its regulations to remove any that are obsolete, overly prescriptive, or unduly burdensome. We have a new strategic plan that guides our priorities through 2030. And a couple months ago, we invited credit unions to share their ideas on how to strengthen the system, to highlight future issues, and tell us what they would change about our strategic plan. We're using that feedback to ground our planning for Main Street priorities. Our plan will focus on safety and soundness, protecting the fund, and creating space for credit unions to innovate responsibly, especially in leveraging artificial intelligence and digital assets. My written testimony discusses the current state of the credit union system and provides an overview of the state of the agency. It also details the work we're doing to empower credit unions and foster innovation. Thank you, Mr. Chairman. I look forward to the committee's questions.
Gentleman yields back. Acting Chair Hill, you're recognized for your 5 minutes of oral remarks.
Chairman Hill, Ranking Member Waters, and members of the committee, thank you for the opportunity to testify today. I appreciate the opportunity to report on the FDIC's recent work to improve our regulatory and supervisory approach across a number of areas while continuing to fulfill our core mission of ensuring deposits, promoting the safety and soundness of banks,